scammy crypto yield shop like Nexo and another one like crypto.com, right? So they'll just push out on the yield curve until the point where they actually have to start taking some directional bets, which both of those guys have, which obviously Celsius did. I would say that, Voyager took a directional bet by placing over half of their customers' funds with Three Arrows Capital. Like other people had stopped lending to Three Arrows Capital a long time ago because they'd done some diligence. So, don't let those guys off the hook. Like that was a really risky move to put over half your users' funds with one offshore hedge fund run by a couple of neophytes that had never had a job before they started running crypto funds. So they're just the walking dead at this point.
With 2023 now in full swing, are we now ready to assess who to trust and who to bust when it comes to crypto lenders and exchanges? Is there still more trash to take out, or has natural selection taken care of it? Please like and subscribe, and as always, thanks for watching.
Where do you think we are on the crypto Ponzi collapse or contagion? Are we done with some major players going bankrupt, or do you think there will be more to come?
So I think the big thing to watch obviously is Genesis and the parent company, because that's still kind of an open question for the next number of weeks or months. There's still also a couple offshore entities, but they're not as concerning to me. I think Genesis is the big question. Basically see if anything unusual happens with GBTC, if it has to go through some sort of liquidation process or get sold or something like that, some sort of tail event. Outside of that, I think that the sharp things are probably done. But then again, before FTX blew up, I mentioned this on Yahoo that I after I saw a number of people mention Luna, I dug into it, and I then grew concerned about it myself before it blew up. And I specifically wrote about how it could impact Bitcoin, because they could be selling their Bitcoin into an already weak market. And so that's obviously a terrible combination. That's what played out. This latest shoe to drop of FTX Alameda blowing up as spectacular as it did was already kind of worse than my base case expected. And so I wouldn't be surprised if there's something else out there. Three Arrows Capital was not on anyone's radar, really. And that was an example. So for example, Celsius was a well-known problem. There are a bunch of these that were well-known problems, whereas there's one that you just don't see coming, like Three Arrows Capital or something. So I think we have to watch and see what happens with Genesis. Outside of that, a phrase in traditional markets is that things can correct in space or time. So if something has to correct, say it's in a bubble, it can either just go down a lot, or it can go sideways a lot and it just over months or years, it works out the excess. And so, for example, Bitcoin, now that all this leverage is blown out, now that investors are spooked out, now that a lot of the coins have shifted from weak hands to strong hands, it could potentially go sideways for a while. It could potentially grind a little higher, a little lower, big choppy trading range, while some of the malinvestments could still bleed out significantly, right? They could just keep grinding, lower highs, lower lows, lower highs, lower lows, as more and more capital kind of leaves some of those dead malinvestment things and either flows towards Bitcoin or gets out of the ecosystem. So I think it depends on where you're looking, but I would point out that not all endings are these big explosive things. Sometimes things just bleed out over years, and I think there's a lot more of that. This still has to happen in the industry.
So who's next on the chopping block? And how long until they're cooked?
Yeah, so the lookalikes that obviously have broken business models that I think by definition end in collapse are crypto.com and Nexo. So I just don't they will fall apart at some point. It's just a matter of time, and it's structural. I think probably, basically if you offer yield and that yield doesn't actually exist from any real productive use, then by definition you have to go out the risk curve. And then also because it's easy money, it's so easy and so dumb, you're always going to have competitors that offer more yield. And as long as it's not regulated and it's happening with these offshore guys that are, creating 134 entities or whatever it is, the only thing that can win in the market, because most people, these dumb people that get into crypto are just price shopping for the highest yields, are just going to go to whoever has the highest yield. They're not able to distinguish between the relative credit worthiness of one scammy crypto yield shop like Nexo and another one like crypto.com, right? So they'll just push out on the yield curve until the point where they actually have to start taking some directional bets, which both of those guys have, which obviously Celsius did. I would say that, Voyager took a directional bet by placing over half of their customers' funds with Three Arrows Capital. Like other people had stopped lending to Three Arrows Capital a long time ago because they'd done some diligence. So, don't let those guys off the hook. Like that was a really risky move to put over half your users' funds with one offshore hedge fund run by a couple of neophytes that had never had a job before they started running crypto funds. So yeah, so they're just the Walking Dead at this point.
Okay, so who is still in our good book moving forward?
And then, yeah, otherwise I would say just, kind of watching like Lynn. I think GBTC is fine. I've tweeted that. Like, I believe that Coinbase, that's just my opinion. I don't have any insider knowledge there, but it just doesn't seem like you would risk a revenue stream like that, making 100 to 500 million a year or whatever, off of GBTC. Like you don't mess with revenue streams like that by playing funny games in the background. And I highly doubt that Coinbase, with all their investors and everything, would actually put their lawyer's stamp on saying like, yeah, we actually have the Bitcoin. So it's probably there. Genesis as a trading desk obviously was a big moneymaker for DCG over the years, but I think is probably done in this form. I don't know if that means that. I mean, the brand seems like it probably has negative equity at this point. Like, I don't know. I would never want to do business with something called Genesis at this point. So it's probably done. I think the other ones that are kind of out there exposed are the ones that have lent to miners over the last couple of years and that took, gave asset backed loans or, took collateral, usually ASICs, sometimes Bitcoin. Well, the Bitcoin is, off a cliff in price and the ASICs are worth, significantly less than what they were, 15 or 20 cents on the dollar versus where they were a year and a half ago. So, there are some shops like Galaxy and, NYDIG that are exposed there. Maybe, NYDIG obviously has like super deep pockets on the Stone Ridge side. So I think they'll probably make it through and be fine. I don't know who's backstopping Galaxy. They supposedly have $1 billion of cash on the balance sheet. 500 of that raised literally at the peak, peak Solana, peak Luna, peak Bitcoin, getting tattoos and stuff. November of 2021, I think they took a convertible note of about 500 mil at that point. But they're also, is in their reporting, they're losing between 250 and 500 million a quarter. So, can they make it through to the other side? We'll see. They've got 4 business lines, and probably the only mature one is trading, and the other 3 are not particularly interesting. I do love the research they put out now that Alex Thorne runs their research team, and we've got a Bitcoiner behind enemy lines over there, and their research is actually quite good. But otherwise, there's just not much that seems to be making money over there. So I'd be kind of looking at, can Galaxy make it through an extended bear market if we go there? And then I guess just like kind of on the bullish side, and this is obviously not good for me as a Riot stockholder after being an advisor there for a couple of years, but it does seem like there's a model developing here in the bear market where it makes a lot more sense for a lot of miners to basically stay private and operate on something more like rev share and just be more responsible in their growth path and not take on leverage nearly as much, and understanding that even in a bull market, you really shouldn't open up facilities that have high power costs, because it just makes absolutely no sense. These bull markets don't last long enough for you to like put a bunch of money aside. And even if you do, that crash could be enough that you'll just have to sell all the Bitcoin anyway, just like Core Scientific and Compute North and all these other ones that are, either already in restructuring or heading toward it, have had to do. They've just had to liquidate all their Bitcoin basically very quickly just to stay alive. So yeah, I look forward to like a more responsible path for the growth of the Bitcoin mining industry coming out of this. And again, just, understanding that leverage without a lender of last resort, leverage without the Fed backstopping you ready to print, means that your financial system is extremely fragile. And I think a lot of this will just wash out. And obviously that's great for maybe not the near term price of Bitcoin, but it sure is bullish for the medium to long-term view on Bitcoin and Bitcoin only.
Let us know what you think below, and we'll see you next time.